Hi, everyone. Roger Connect, president of Universal Accounting Center. And again, I'm here with Erin with Profit First Professionals as the topic of discussion. And one of the things that's exciting is we're going to be looking at what's that first step you would take after assessing your percentages related to your different categories for cash disbursements. And one of the things that Erin's going to do here is address establishing a rhythm and evaluating expenses for your business. And so this is going to be a really exciting discussion, Erin. So take a moment now and just kind of introduce to us the starting point that we're going to begin with.
Thanks, Roger. While I get to that, I want to introduce to you Angie. Her name is actually fully Angie Burns. She is an entrepreneur. She and her husband run an IT company, and she was actually formerly a medical controller turned Profit First professional guide. So she's going to come in as our expert outsourced set of eyes to share with us a couple of things that you can do in this first phase, which is really cost cutting. Okay. I know it's kind of an awful thing to think about, especially when you already feel like you're at a place of angst and, all right, level one, you just ran an assessment on your business. And in most cases, it's a little different than what we typically expect. So I want to encourage you right now. Congratulations for running an evaluation on your business, taking the time to understand it at a different level, understand it from a different perspective. And if it was a little uncomfortable, that's really okay. We call it getting financially naked, and that's usually not the most comfortable thing you can do. And Angie, having implemented not only in her IT company, but also in her medical practice, I mean, she could definitely attest to that.
Yeah, absolutely. What I was surprised at was the emotional side of it. Good and bad. It puts things in a different perspective for you. And that was the part that was the most surprising for me, was seeing that emotional side and experiencing that emotional side and knowing that, okay, here's where I'm starting. It's only going to get better from here.
So, Angie, one thing I'd like to ask is, obviously, as you were saying that this is an emotional side, did you feel vulnerable? Because I would imagine that as you kind of put paper to pencil and pencil to paper, I should say, and figured out the specifics, I'm sure you started to realize that you weren't doing as you perhaps hoped or thought you were. Was that a vulnerability moment?
Absolutely. Yeah, I think especially having the accounting background, I felt like I should have done a better job. I should have been more prepared. And to a certain degree, it made me feel like I failed. And, that's where the emotional side of it comes in that I wasn't prepared for, because you look at your P&L and, you'll see a positive number at the bottom, but that doesn't necessarily mean that that's what it actually is. And so looking at it from the Profit First method, it really opened my eyes to how healthy the business actually was and where we could definitely improve upon. So.
Very well said. Thank you.
Yeah, it's you kind of think of Profit First. Your business is a house, okay? Accounting is you coming in the front door. There's usually a nice foyer. That's where we're going to put on our best foot. Our impression starts there, right? Profit First is us coming in through the back door. The back door is usually right there in the kitchen where your dishes are or your dirty sneakers are from, taking the garbage out. A little bit of mud, a little bit of life is involved in the analysis. So now that we know where we stand and we've identified what our current allocation percentages are, our caps, how do we get to our target allocation percentages? And that's what I want to spend some more time on today. Most of the time when we think about this, the first thing that comes to mind is, oh, I'm just going to sell. I'll just sell. I'm going to add this product. I'm going to do this. I'm going to do that. And that's all fine and dandy, right? Sales is a great place to see some change in our profitability and our finances. The trouble with sales is that it's not always the quickest result. And it also isn't addressing the underlying issues. So yeah, of course, you can increase your prices. You can make changes to your margins. You can sell more at, increase your product offering. All those things obviously will affect your bottom line, your profitability, but it will not solve the place of struggle if you're experiencing that in your caps. What really changes how we look at our money is looking at how we spend, our systems, our processes, our mindset. Believe it or not, I think that most situations where there's trouble in the business, something's going on under the surface that's causing it. And often the first step to solving it is starting right in our mind. And looking at an expense evaluation, taking our numbers and digging a little deeper, that's no exception. That is just as much a psychological experience as everything else. So believe it or not, when we think about our business, when we think about our percentages and we're making the shift, the first thing we want to be mindful of is that, Angie said the magic E word. It is all emotional. Every little piece of it is emotional. Actually, every time you spend, your brain actually releases dopamine, aka the happy hormone, right? We become addicted to dopamine. And it's not in a weird, crazy way, but we're wired for that sensation. So stopping it is just twice as difficult, but even more so, when you think about the traditional method of cutting expenses, we typically come in and say, okay, well, this is wasteful. I don't need that. And, it's difficult to eliminate waste and uncover our profit potential because it's difficult to identify what is excess, right? Everything is of importance. You're making decisions probably reasonably in your business, right? You're not just wiping your credit card left and right and paying for lavish vacations on the regular. Not likely, right? So it's difficult to come into a situation outside of this emotional state and understand what's really truly going on. That's one piece, of course. The other piece is loss aversion. This is not only a psychological theory, but it's also a decision-making theory that tells us that we would much rather not lose something than gain it in equal value. So, kind of make a little bit more sense. We would much rather not lose $5 than find $5. It's way more exciting for us to keep what we've got than us to make more. So think about that in real time. Where does a survival trap come into play? We would much rather sell, afford all the things that we've already had versus eliminate our expenses. So with that in mind, now that we have a little bit more perspective in that regard, how do we take ourselves from those caps to those taps? What do we actually need? And that's the first question that we're going to ask. A lot of times we come into our business and we don't actually know what we need. So first step in the expense analysis is we are going to run a profit evaluation, an expense evaluation by running our profit and loss statement with a percentage of what it includes in our revenue. So you can do this in your QuickBooks, you can do this in your Xero, you can ask your bookkeeper, you can ask your accountant, but what you're going to do is you're going to actually go in and just run the report with the percentage of what each point is in relation to revenue. Okay, so you see sales here is 100%, cost of goods sold is 30, gross profit is 70. All of these add up to that. If we can look at the business in this light, it's helpful for us to actually have a stronger comprehension of what is going on in the business, right? But we are going to take this to another level, pretty much bring it to a place where we can eliminate the emotional side of things, or actually not even eliminate. We're going to work in conjunction with our natural behavior. We're going to reverse engineer into this target. Okay, so we know what is going on in our percentages, right? We have our target identification as far as where we want to be in our percentages. Now, since we understand that, what we're going to look at is exactly that. Instead of us coming in the rear end and saying, I don't need this subscription, I don't need to spend this much on this product, right? That's a really difficult thing to diagnose. Instead, what we're going to do is we're going to come in and we're going to say, okay, I know in my business, these things are imperative. We're going to look at that P&L and percentage to revenue, right? If you ran your assessment and you found that your targets are in line with column A, whereas 5% in profit, 15 owners pay, the operating expense line item is 30%. That's our target for this quarter in our own personal business. If our real revenue is between $250,000 or less than $250,000, I should say, right? So when we look at our P&L in percentage to our revenue, what we're actually going to do is we are going to pull the information out and say, okay, what in here is imperative to the success of my business? What do I genuinely need to survive? Okay, this is where that reverse engineer piece comes into play. A lot of times we're coming in from the back end where we're trying to identify excess. That's a really difficult thing to do if we don't really know what we need. So we're going to look at our expenses and we're going to identify typically software, rent, electricity. Can I hear it for electricity, right? We're going to purchase all of our payroll, our team, right? What is imperative to functioning? Let's look at those things, okay? Once we see that we've got 30% in that sum, okay, the things that we need that are imperative is equivalent to 30%, then we're going to ask ourselves a couple of questions. And this is where the main chunk of this exercise really comes into play, okay? Let's look and see where we can cut, okay? And I'm not going to say cut because that's probably not the best way to put it. Let's wring the towel a little bit, okay? We know that we absolutely need the software to function, okay? But can I ask you a question?
Sure.
You've been doing this for 100 years, right? When's the last time you called and asked how we can work together? What can you do for me, right? I look at my own life. I can't even tell you how much my cable is. It's embarrassing because I haven't called in 6 months and they raise it underneath your nose. Same is true with a lot of our expenses, right? You look at your insurance, you look at your cable, your internet, things like that. They raise them in accordance to market value. Maybe your software is the same. Maybe the tools that you use are the same. It's just been going up and up and up under your nose, maybe under the radar. And it's just adding to that angst that you're experiencing in your business. Call them.
So let me jump in here. I want to share a few insights that I think are helpful with this discussion. And the first is when you're back on step 3 and you're going through the analysis of determining what really is needed, one of the exercises that I found very helpful is once you've identified those percentages to see which area needs a little bit of attention, you can then do the expense detail associated with that area and dive in and actually kind of rank them and say a 1 is something essential to my business, a 2 is perhaps something that I could either negotiate as you're suggesting or find another vendor that may be able to provide it, or 3, I can actually eliminate this, and if I eliminated it for the short term, maybe I wouldn't notice, or 4, I can get rid of it altogether. And if you go through and you prioritize and you rank them, it's got to be a 1, 2, 3, or 4. It allows you to more easily try and sort through all those monthly expenses and determine which is going to be eliminated or not. But to your call and negotiate story, I've got 2 examples. One client we actually happened to have, they have a phone system and they had never actually bothered to call the phone company and renegotiate anything. And it was a simple phone call that really dramatically impacted the phone bill simply because they were on an old plan that was non-existent anymore. I mean, obviously they're on it, but there were better rates available. And personally, my wife and I just had this conversation literally last week. For more than a year, actually for a number of years, we've been eager to get rid of our landline. I'm sure many people out there don't have landlines anymore. But every time we spoke with the phone company, they said if you eliminated the landline, our bill would go up for the cable and for the internet that we had. So eliminating one service actually caused our bill to go up. Well, she coincidentally last week was actually talking to the phone company and they were discussing the phone line, the cable, and the internet. And the person on the other end said, would you mind if I shared with you another option? And she said, sure, I'd be happy to. He said, if you got rid of the landline and replaced it with an alarm service that they offer, that would actually take our bill down $15 a month. So we kept the cable that we wanted, we kept the internet that we needed, but we're able to get rid of the landline that we've not used. I mean, if somebody calls our home phone, nobody answers it anymore because everybody has a cell phone. If you need me, you're going to call my cell phone, not my landline. So if you call my landline, that's a dead giveaway that you really don't know me or need me. So nobody answers the landline anymore.
Yeah.
So it was an easy thing to give up. So I love how you're suggesting that there are these options that maybe not so obvious, but if you just take a moment and quarterly or yearly go through this exercise, you're going to find things that are available to you.
Exactly. So, and this, the power of this is, I mean, you mentioned identifying your expenses in 1, 2, 3, 4s. We're not just doing this and eliminating and talking about 2s, 3s, 4s. We're going to do this in level 1s. The things that are imperative to your life, call and negotiate. Because, I mean, if you haven't called your QuickBooks, your Xero, your phone company, your insurance company, and just said, hey guys, not, can you do anything for me? You know, that option, yes or no questions are never going to really get you where you want in circumstances like that. Just life lessons with Erin, right? What can you guys do for me? Is there any other possible scenario where we could both come out in a win-win situation, right? I've been a loyal customer. Explain the benefits of working with them. Explain how you've been so gracious and paid on time, regularly, consistently. Explain how you're grateful for them. Kindness goes a long way, right? You might find that for those ones, the things that are imperative, just by calling and having a conversation, you could actually save some money. You could get a discount. You might make out with a nice security system at the end of the conversation too, right? But you might also find that they'll give you something big to increase efficiencies. You might get the new technology coming out for no extra cost at all, just to say thank you. They might not necessarily cut your expenses, right? But they might give you a greater value for what you have to pay already. So going through and having conversations around it is really impactful. You know, we also, in these ones, while it might be imperative, there's also the question is it as relevant as it could be? You know, in that situation, you had a plan that they didn't even offer anymore. Same is true with technology. You could be spending a boatload of money on something that's irrelevant. It's constantly changing. It's constantly evolving. Spend some time doing a little bit of research. Hey, what are the best options out there? Because you might find one that yields a greater efficiency, that actually works in a stronger way with your technology stack and allows for more option at a cheaper rate, maybe even free because it's new, right? And even then, if it's not free, call them and ask them if you could be a beta. I'd love to give you a testimonial. What you going to do? What can you do for me? Right? So going through and just doing that with the things that are imperative can really help. You know, also just verifying there's no overlap. This is a really easy thing to do in a lot of silly ways. You might have 2 subscriptions. Like, let's say you have Receipt Bag and HubDoc. Both are great tools, right? Do you have both of them? Is there a way that you can consolidate? Is there something that's going to make you more efficient and effective? How many of your clients are on 7 different things that do the same? Is there any way that you can cut your transactional relationship down by creating your own technology stack and showcasing it to your clients instead, right? So that's a couple ways that you can save on things that you already have, you know, and of course, tracking and identifying what your daily investments are, right? So these are the things that are impactful even in just level 1, okay? For those things that are imperative to the function of your business. And I will let you know, after you do this, with the things that are imperative for your business, I mean, we discussed 30% as our target for this first phase. You might only walk away with 29.8%, okay? You might not save much. But kudos to you. You just saved 0.2% on something that's imperative to your business. You confirmed its efficiencies. You ensured that your technology is positioning you to be the strongest you can be. That is a very powerful thing. So if somebody asks you, you can say with confidence, nope, I'm in a good place. I'm running as efficiently as I can be. So once we do that, then we ask the question, can I function?
Hold on. I want to throw something out here to add to that, just as a tip.
Yeah.
If you're not doing it, who is? No one else is going to do this analysis and make these decisions and adjustments other than you. So don't feel that this is anything that you can delegate or that you can abdicate. If you don't do it, it won't be done. And so what we want to just recognize here before you go to that next step is you're the one that needs to go through this process. And until you do it, it won't be done. So
that's a great point,
it's a
Roger.
very important point. Yeah.
Yeah.
I have,
Angie, jump in.
yeah. One thing that I've seen, even us on the IT side, fall into the trap of, we go to these conferences and vendors are always giving deals. And so we sign up right then. And so going through exercises like this, we say, well, but we don't want to cut it yet because we're going to use this soon, or we're going to use this at some point. We've locked in a lower rate now. Well, yeah, you've locked in a lower rate and you're paying this lower rate, and that's great, but you're not using it. So all those months that we've been paying for it, that we're not using it, that's not putting us further ahead. So a lot of times, like even ourselves, as we're going through this exercise, we keep trying to justify the cost to ourselves. Like, oh no, wait, I can't cut that yet because I'm gonna need it at some point in the future.
Mm-hmm. And that's where that loss aversion really comes into play, right? And why even just shifting your perspective, coming in from the things that are imperative. Now, when we start to think about, okay, is the business able to function with just this 30%? The things that I have that complete this 30% bracket, can I function? If yes, awesome. Cut everything else, right? Go for it. Try it. What's the worst that could happen, right? Besides eliminating efficiencies and, having to start from scratch. Depends on how drastic it is. If the answer is no, here's where you get to come in and say, okay, I might not be able to function at 30. Okay. That's my ideal sweet spot. That's where I'm really striving to achieve. I'm not there yet. What if I did 40? What if once I go through that 10% in addition to this, I'm going to go through those 4 steps, those 5 steps, see if there's anything that's outlying, that's excess, things like that. Then I'm going to go in and say, okay, can I function at this point? If not, I'm going to add another percentage point. But what we're going to do is we're looking at our business in relation to what is most relevant and imperative. So what happens is when you do that, now you're looking at your people, you're looking at your software, you're looking at actually where you go to work with electricity and things like that. When you get to that little subscription, or you get to that thing that you signed up just because it was a good deal, there's a lot less emotion around it, because now you're comparing it to things that are imperative. And again, it might not solve all the problems. It's still not going to be an easy cut, because we're not wired to eliminate, right? Not everybody is anyway, right? So the challenge is having a little bit of discretion and discernment, but it's also a call to action in one way, shape, or another. If you thought, okay, I forget who said it. Somebody said it to me recently. If we spent every second in action doing something, what is it keeping us from doing, right? Think about your expenses. Everything that we spend on is taking away from something else that we could be doing with our money. Why did you start your business? Why is it imperative that you succeed? What is bringing you to a place where you want to even explore the health? Is it your retirement? Is it your children? Is it peace and sleep? Every time you spend $1, just think about that. That could be the difference between you having a comfortable life in 10 years and you having a candy bar in your hand now, right? Not always an easy decision in the moment, but if we're looking at things relatively, if we go back to our why and the reasons that we're driven to do these things, it does bring perspective to the table, and perspective and understanding are the only thing that we have to fight against this loss aversion, because it's no joke. Okay. So just being mindful of that as we go through everything. But there's also, it's imperative too, when you're going through this, to understand that there are extremes. Not every business is going to fit into a box or a mold. And I know we talked about that last time. So how do you handle an industry, Angie, I'm going to ask right now, how do you handle an industry like IT and the medical field, and anywhere there's excess or an extreme situation, I should say, in relation to payroll and other things? How do you handle that in an expense analysis when our target seems so minimal in relation to our need? So Angie, I'm going to pass it on to you, because I'd love to hear a little bit more about your perspective.
Yeah, absolutely. So as Erin said, with the IT industry and the medical industry that I've worked in, there are higher salaries for certain positions. And being on the controller side and being on the payroll side, seeing that and seeing the effect it's had on the financial statements, on the P&L, being able to make payroll, things like that. What I've done before is parse out the payroll piece of it to really truly see what does it actually cost to run the business. Because when we look at those higher salaries, we also have to keep in mind that those are revenue generating positions. So the money that they're bringing in the door should cover all of their salary plus X amount percentage to go towards the operating expenses, to the overhead, to cover the admin positions, to cover finance that isn't a revenue generating position. So as we're looking at different salaries, one of the things we can do is, as we're going through those percentages, like Erin's been going through with us, if we see, okay, here is the percentage that I need this to fit into, how much you can offer a new employee. So say, for example, the medical industry. Maybe it's not a doctor that you bring in. Maybe you hire a physician's assistant, where it's a different salary position, like cost-wise, it's still revenue generating, and it's fitting within the means of your business so that you can still be profitable. You can still maintain your percentages. And I've found that it's helpful to have a separate account and on a weekly basis, allocating what you're going to need for payroll into that bucket so that when you're going to pay bills, you don't have to think, okay, I have payroll next week that I need to account for. So, okay, how much do I actually have that I can spend to pay these bills coming up? Carve that out. Set that aside in another account. That way, when you're looking at your financials, when you're looking at your bank accounts, you can say, okay, I know I have this amount that I can spend on bills. The IT industry is the same way. You have various levels of experience. You have, people that do Citrix that are going to be a higher rate than maybe a level 1 help desk employee. Both of those are revenue generating positions, but the bill rate that they have are greatly different. So it allows you to take a step back and look at your business and say, okay, where is my greater need and what will help me achieve what I need to sustain my business, and that will fit within those parameters that we're establishing, because it really helps you from overspending. Because you might be able to bill more for maybe somebody that does Citrix, but maybe there's not nearly as much work for them. So you have this big salary, but you don't have enough money coming in to sustain that. Whereas maybe you would have been better off getting a level 2 or even maybe a level 3 tech that can do not quite everything the Citrix person could do, but it can help cover all the other things that you need done. So really taking a step back and looking at what your needs are from running your business and servicing your clients. The same thing with accounting. Do you need a CPA on payroll, or do you need somebody that you can train to do bookkeeping? Those are ways that we can look to stay within our parameters, and it also lets you know how much you can offer an employee coming in and looking at what your employee costs are. And in certain industries, you have different types of insurance that you have to pay for. For example, in medical, you have malpractice insurance. You don't have, something like that in IT. Granted, we have, some other types of insurance that we carry, not nearly as expensive as malpractice insurance, but it is something unique to that industry. So knowing some of the unique situations that you have, being able to price out different insurance providers. Just like Erin said, call and negotiate. Every year that you're renewing your insurance, you should be looking at what are all your options out there. Who can provide me the coverage that I need at the best price? And, how do we account for this? Like I said, open up another account. It helps bring so much clarity to your business and what you actually have to spend to operate and cover all of your overhead costs. And it sheds so much light on it.
That perspective is actually very helpful because Angie, I think you're sharing something that a lot of businesses experience, which is I'm unique, I'm special, I do things a different way. And Erin, as you were describing this mold or this box that we want to try and put everybody into, everybody wants to think they're the unique one. I'm the special one. I don't fit in that box. So I appreciated your perspective, Angie, because you gave some illustrations of how you can think this through and how certain industries it might apply to. And I just want to share real quickly a simple analogy. We have a program called the STAR program. It's basically creating a culture of accountability. And in that, we actually teach this idea of identifying with payroll is the person that's actually in that role a front office or back office individual. Front office implying that they're interacting with the customers, back office that they're actually doing more fulfillment and production. And the easy way to allocate those two is simply to say that the production person, they're looking at efficiency. How can they efficiently be doing their work? And the more efficiently they do it, the more profitable they are. In the front office, though, it's basically associated with either new client acquisition or client retention. And it's the revenue that they're both appropriately assigned to, whether they're keeping clients or relationships or they're bringing in new ones. And so that can help in this part of the discussion to assess, okay, when we're looking at the percentages, really, how do we kind of address this payroll situation? So just some wonderful pieces of advice there.
Yeah. And the other thing too is, we are profit first. We use our percentages as basically as our line, right? It's our targets where we want to go. It drives our innovation. Even it drives this conversation. There is nothing wrong, though, with taking a look at your industry standards, right? Identifying where you stand in relation to those that are in your industry, okay? One thing I do want to point out is we don't hold ourselves to those standards, okay? Because industry standards are really just the averages. We don't want you to be average, okay? But it is a good benchmark for a reason, because it allows us to see, okay, based on where I stand now, am I in relation with the average? Am I below average? Because that's a call to action in and of itself. Or am I exceeding? And if I'm exceeding, what am I doing? How can I continue to reciprocate that and continue that through other areas of my business, right? So comparing yourself to the benchmarks can be beneficial, but looking and striving to achieve that target allocated percentage, it's not just to shove you in there. It's really to bring you to a place where you're starting to think outside of the norm, identifying ways that you can really excel even in your uniqueness. Because the truth is, we can all be better. Okay, even on our best day, something might change. You have an opportunity to make a good decision, or one that's not necessarily going to put you in the best position, right? So this just allows us to be vigilant. This allows us to have a little bit more insight into the things that are going on in our business, because if we're not vigilant, then we're being reactive, okay? And the goal is always to be proactive. And there's a couple ways that you could do that. First one is support. I mean, Roger, you said it in the best way. If you don't do it, nobody else will, okay? There is power in taking action. There's also power in having a second set of eyes. There's power in perspective. So if you don't have somebody that you can count on and that you use to account for different things that are going on in your business, it's difficult. Because again, we are so in the day-to-day. We are so emotionally involved and invested. Having somebody from an outside perspective with a little bit of understanding and expertise in what it is that you're doing can really allow you to look at things in more depth. They'll ask questions that'll get you thinking, right? And there's power in that. Energy follows focus. So the more you can spend time and attention in it, it's really impactful. So beyond just the accountability factor, doing it, being consistent in it. What does that time frame look like? I mean, we talked about rhythm in our allocations 10th and 25th. Doing this in a rhythm, even if it's just every quarter, you sit down. It doesn't have to even be in this full, extensive expense evaluation, but it could just be, let me see where I could potentially adjust. Is there anything that I feel might be off, right? Dues and subscriptions, they don't just become recurring things overnight. right? So sitting down and having a comprehensive evaluation of what's going on, if not quarterly, biannually, but certainly please don't make this more than an annual thing, because there's a lot of good that can come from being proactive versus reactive. And of course, if you need help, we have Profit First professionals that are trained in this concept. They have a lot of depth of experience, a lot of depth in education. They can definitely provide for you that accountability, support, and also the tools. Tools are a big factor in this as well. If you're looking for a Profit First professional, always, of course, if you're looking to become one of these trusted advisors, if you go through this and you say, yeah, I just did this in my business, it was powering, it was empowering and riveting. I want to offer this to other people as well. Feel free to come and find us. Anything that you need is at profitfirstprofessionals.com. Questions, concern, and of course, you can always reach out to us directly. I'd love to help.
Well, first of all, Erin, thank you for this. This has been a very insightful thing as to applying then certain principles to actually address these percentages. And after you've done the assessment, move the needle and actually make some changes. And Angie, your perspective and insight has been phenomenal. And one of the things that I'd like to just thank you for is the fact that as a user of the Profit First philosophy, you're able to attest to how it's actually helped and benefited your business. So, basically, thank you for your time. Is there any final thoughts that you, Angie, would like to add to this discussion?
The only thing I'd like to add is it's interesting as you go through the process and you go through that deep analysis into your expenses, you'll start looking at things differently. Before you sign up for the shiny new object, you'll step back and you'll really reassess. Okay, is this going to help me get to my targets? Is this going to help me replace something that I'm already using that can increase, my percentage that I can switch to my profit account? Is this going to help me? So you'll start to make that mind shift change. And it's really exciting the way you start looking at things like that then.
Perfect. Thank you. And Erin, I appreciate your way of articulating this because I think it's just so natural. It flows. You've definitely got a passion for this. It's very contagious and this is helpful. So what I'd like to do is just mention that in the description beneath this video, I'm going to put some resources, some of the things that Erin's mentioned. She brought up benchmarking. There's a tool that's called BizBench that I'll provide some information about. I'll also give you some information related to becoming a Profit First professional and how you can actually apply these principles not only with your own company, but with your clients as another service and be paid for these consultative services. So Erin, what final thoughts might you have to add?
Every small step in the right direction is a step in the right direction. You're not going to get there overnight in most cases. Good things come when you just take action in the moment.
Good things come to those who wait.
And work.
And are persistent.
David said, persistence. Yeah. There you go. So with this, basically, I just want to end. Obviously, if you're interested in succeeding in accounting and making a difference, just remember this. If it's about accounting, it is universal. We're excited to work with accounting professionals to help them apply these principles, not only in their own companies, but with their clients and literally become what we refer to as a profit and growth expert. And for that reason, just realize this, accounting success is universal. So take care, have a wonderful day, and look at the descriptions for additional resources and information related to this video. Take care, everybody.
Thanks, Roger.
You bet. Bye-bye.